20% of all spend, so in chronological order, 5 to 7% of your total revenue is a benchmark for IT spend. So if your revenue is $1 billion, you're spending 7% of that. If your revenue is $100 billion, you're spending almost $7 billion in IT. Out of that pool of IT spend, almost 20% is going to governance, risk, and compliance. 20%. So if I'm spending 100 million, I'm spending 20 million in reporting, in governance, and in compliance. And compliance also means IT audit, operational audit, 20%. So we are saying that this is only going to grow. So next year when we meet at the Congress, I wouldn't be surprised if that ballpark figure has reached almost 22%. The reason being, again, regulators are not abating. Regulators are not slowing down. And the minute they get this knee-jerk reaction around AI cognitive, more is going to come up. I'll give you an example. Hundreds of billions were spent in India to come up with what you call a unified ID. We all have ID cards. India just introduced them. And because it was a new initiative, they opened the APIs. If I want to do a credit check, if I want to do if you're exposed, if I want to see how many cards you have, important information, you could leverage that data point. Now that's been stopped. All of the banks that had built systems that could leverage this data have to redo those systems and go back to traditional IT check, credit check, market check methodology. So we see AI becoming prevalent, data monetization become prevalent, and along with that comes the paranoia, if I can call it that, of RegTech and regulators. So I think that is going to, not substantially, but significantly increase and go between 18 to 22% of total IT spend, going to GRC, which is governance, risk, compliance. RegTech for me is the outlier. So humanly possible is the bank's way of being affable to you. You don't need to come to us. You don't need to open an app. We cognitively will offer you, help you, provision you. That's what humanly possible means for a bank. RegTech is not going to be happy with an institution prying into your life, unless that magical word, again, Michael alluded to that too, which is called the opt-in or the consent. The minute you give a consent saying, I'm okay with the ecosystem, I don't want to flip, click, drive down, I permit you to see my trend and offer me exactly that coffee at that time or that lunch with that discount. So humanly possible is a new initiative. We've coined it, we are delivering it, we are advocating it. What's going to happen is as and when institutions become more honed in with AI, cognitive, RPA, and they automate these processes to be more human in touch with you, that's when the regulators, I'm quite certain, are going to come around another wrapper saying, thou shalt not use AI without permit. Thou shalt not do this. So I think another line of reporting, what was sold and show me the consent would become another form that the bank would have to submit. Today, 60 customers in corporate and 250,000 were converted to opt-in. And then the bank will have to furnish a report around it, I think. Actually, they will, and they are saying it. One of the largest banks, one of the four that I just mentioned, said enough is enough. But unfortunately, there is no way out. You see this Bank of International Settlements, the Bank of Banks, the Central Bank of Banks, is not going to abate anytime soon. And then, various other factors like tax evasion comes in and KYC comes in. I think this is here and this is not going to go away. It's up to the banks to find an innovative way to either diminish the cost and automatically keep giving, or it may lead to a point where, hey, Mr. Central Banker, you want information? Here's my API. You consume as you want. Don't burden us. So if you want to see my total credit exposure, APIs are published. If you want to see my total lending or my total borrowing, my total positions, my total credit risk, my total market exposure, APIs are published. So I think maybe in a nirvana stage, tables may turn and saying, if you want it, it's published, open APIs, consume it. I don't know if somebody would have the audacity to do that to the central bankers, but in an ideal situation, enough is enough. Well, we open the APIs. You use as you please.